right, here we go.
Americans are not feeling any better about the overall economy.
The U.S. labor market is not as strong as it has appeared to be.
How is the Fed going to communicate that it's staring at stagflation?
Unemployment, prices and the risk of a US recession is rising. A financial storm facing the world's biggest central bank, with tariff uncertainty making bosses reluctant to hire.
Immediately their cost of doing business has gone up, and to cut costs, usually that would mean that they have to leave some people go.
At the moment these tariff agreements are like Swiss cheese. We'll see where they settle. Maybe they don't settle, and maybe that's part of the uncertainty.
It's all taking a toll on the value of the US dollar, steadily declining since Donald Trump took office. But the US president says it's all part of his plan.
But you make a hell of a lot more money with a weaker dollar, not a weak dollar, but a weaker dollar than you do with a strong dollar.
For Donald Trump, a weaker US dollar solves many problems. It brings in more tariff revenue and lowers government debt, because each dollar of debt is worth less. But analysts warn a weaker currency adds to inflation, because it lifts the price of imported goods.
And we've got a situation where inflation is elevated and very sticky, if you look at the charts. And core inflation is sticky as well. So the Fed has to really walk a tightrope here.
The US Federal Reserve board members are not the only ones treading carefully. In an increasingly uncertain world, the desire for investors and novices alike to find a safe place to put their money has grown exponentially. That's pushed the price of gold to record highs, and analysts insist the value of the precious metal can only increase.
All of the fundamentals that are driving gold, central bank demands, investors allocating to gold as part of their portfolio, those tailwinds have a long time, a long runway to play out.
It's telling me there's uncertainty. It's telling me that there is a concerted effort to diversify away from currencies, and in particular the dollar. You see this in the performance of non-dollar equity assets. They're going up against the US stocks. And so I think there is a flight away from positions that were built up over the last 15 years.
That flight of money has also caught the attention of Australia's Reserve Bank and its chief economist.
We don't see anything very immediate in front of us, but that's not to say that something couldn't develop. And if something develops, then we'll respond.
Trillions of dollars across the globe stand ready for more volatility.